Yes, my dear student. How are you all? I hope everyone is absolutely fine. I am also doing great. By the time you listen this video, you have already completed your Group 1 CA final examination, and I hope you have written exceptionally well in your examination. All the best wishes for your examination result. In this video, we'll be discussing means I'll be giving you my review about CA final financial reporting question paper. And also I'll provide you the suggested solution for this particular question paper. However, the discussion will be in two parts. First part, missing current video, will be discussing only multiple choice question. And after some time, means soon, I'll be also releasing one more video in which we'll be discussing about descriptive question. Of course, that part will come after the completion of Group 2 examination. Now, as per my review related to multiple choice question, what I have understood, all the multiple choice questions are based on conceptual understanding. Means if you know India's conceptually and you have never done any multiple choice question, then also you can attempt all the question correctly. Conceptual understanding was required. Second, some of the multiple choice questions were directly from ICA resource. When I say ICA resource, it means the multiple choice question whatever ICA has provided in the Board of Studies portal, directly from that particular portal. Some of the questions might be new, but that are totally based on concept. Once again, I will say, if you are conceptually clear, you can attempt each and every multiple choice question correctly. Let us start a discussion about the solution of each and every multiple choice question. We will start with case study number 1. Now, what I have understood that there might be different set of question paper. Means whatever question paper I have received, the case study number 1 may be different from your case study number 1. It depends upon different set of paper. So don't be confused with the case study number. Understood? Means whatever I am discussing as per the question paper whatever I have. Yes, but multiple choice question will remain same. Case study will remain same. So case study number 1, I will start with reading the questions only. So case study number 1, first you can see what they have written. With respect to joint operation engaged in the business of mining precious metal, how will the liability will be disclosed in the books of Tara Limited? This is a question directly from ICA resource. Correct? Now let me come to the case study. What they have given. Tara and Jara Limited are the partner in a joint operation. They are two joint operator in a joint operation. The entity used a jointly owned drilling plant in its operation during the year ended 31st March 2024. An inspection was conducted by the government authorities in the mining field. The inspection authority concluded that adequate safety measures were not followed by the entity. As a consequence, a case was filed and a penalty of 100 crore has been demanded from Tara Limited on 1st September 2023. It was demanded from Tara Limited. Got this point? The legal counsel of the company has assessed that demand and opined that appeal may not be useful and the appeals order will be unfavorable to the joint arrangement. You can see the appeal order will be unfavorable to the joint arrangement. Correct? So you can see this has been demanded from Tara Limited, but Tara Limited was actually a partner, or we can say joint operator of a joint arrangement. Correct? Yes, sir. As per terms of joint operation agreement, out of 100 crore to be paid by Tara Limited, 60 crore will be reimbursed by Jara Limited to Tara Limited within 3 months from a date of any demand made in respect of joint operation by the government authorities. However, till the year end, the actual reimbursement was not received from Jara Limited. Till the year end, actual reimbursement was not received. Now coming to the option, when you read the option, you will be some confusion about the option. You can see option number A is what? Provision of 40 crore and a contingent liability of 60 crore. And option number D is provision of 100 crore. Now, there are 2 points, and based on 2 points, option can be, the correct option can be option number A also, and the correct option can be option number D also. Understood? Means if you read Ind AS 37, Ind AS 37 says that if any entity is jointly and severally liable for any obligation, then the part of obligation which is the obligation of other party need to disclose the contingent liability, and they should create a provision for their only for their part of obligation. Means as per that particular para, option number A is correct, because Tara Limited, if you can see Tara Limited, as per the agreement, because agreement was already done, agreement what was done as per terms of the joint operation agreement, out of 100 crore to be paid by Tara Limited, 60 crore will be reimbursed. Means their obligation is only 40 crore. If 60 crore is not paid by the other party, then it become a liability of what? Tara Limited. I hope you are understanding. But can I say right now it will be disclosed as a contingent liability. So option number A might be correct. But as per ICS solution given in that particular resource where this question was given, in that answer was given option number D, based on the part that it is a question of reimbursement. If it is a question of reimbursement, then first they should create a provision of 100 crore, and they should also disclose a contingent asset. Why contingent asset? Because reimbursement is not virtually certain. If reimbursement is virtually certain, are you getting? Reimbursement become virtually certain, then they can recognize an asset also as separate asset. So right now option number A can be also correct. Option number D is also correct. As per ICS solution, option number D is correct. Means I am not saying option number A is correct. Option number A may be also correct. Option number D may be also correct, given based on the reasoning whatever you are giving. But reasoning was not required. Reasoning was not required. Got this point? So I leave this particular point based on ICS solution what they are taking. As per ICS resource, the answer is D, not answer A. Have you understood what I am saying? Yes, sir. Coming to the next point. Classify the financial asset and debenture. Classify the financial asset and determine the subsequent measurement for the aforesaid debenture instrument. Now, in this also, I will say the information is not clear. So, some of the part the informations are not clear. So, student might have taken much time in answering that. You can see what is point number 3. Tara Limited is invested in debenture whose interest rate is floating in nature, and as per terms of instrument, interest will be reset every month. As per term, rate of interest is MIBOR plus 2%. So it is a floating rate debentures. Now can I say any financial asset can be classified as amortized cost if they have decided to hold it till maturity, hold a contractual cash flow till maturity, or it may be classified and measured at fair value through OCI if they hold the contractual cash flow and sale whenever required. And it is held for the purpose of trading, then the same financial asset can be measured as held for the means it can be measured as FBTPL. So that information has not been given. That information has not been given. I will say it can be any of these three depending upon the business model. The business model has not been given. Are you able to understand? From my point of view, it can be A, it can be C, it can be D. B, it cannot be B, because financial asset measured at FBTOs without recycling, that is for equity instrument. For debenture, for debt instrument, it is always with recycling. So it can be either A, it can be either C, it can be either D, depending upon the business model. If question is silent, always in class I said always assume amortized cost. So from my point of view, the best answer might be A. Best answer might be A. Got this point? Have you understood? The best answer might be A. Chalega. So also we will not fight right now on this particular point. However, if you have given the reason, they may consider reason ki why you have opted for A, why you have opted for B. I hope if you remember in class I have said that in multiple choice question, whenever you doubt about the two answer, give the reasoning also. So when you are giving the reasoning, can I say that particular point can be considered, but can I say in OMA sheet how you will give the reasoning? Correct. That is a difficult point, Kisa. How we will provide a reasoning? Reasoning can't be given. So it can be A, it can be B, D, it can be C also. So we will not fight right now. But best answer is what? A. Point number 3. Which of the following option will be considered as reportable segment for Tara Limited? Reportable segment for Tara Limited. A very simple question has been given. You can see segment profit has been given. So whenever they have given segment profit or loss, the first you need to find out total of all profit. You can say total of all profit is 4219. Then total loss is 2900. We'll take higher one. In absolute term, higher is 1 is 4219. Now we need to find out segment result in relation to the total profit. So the percentage already I have calculated. For segment 8 is 30% and 62% and 6.6%, 7.4% and 62%. Based on these, can you say A, B and E are reportable segment? A, B and E are reportable segment. This is very simple. I hope everyone have done correct in this. Correct. Then point number 4, calculate the current liability for the machine from Dara Limited to be shown in the balance sheet of 31st March 2024. This question is also, I will say, not correct. Why it is not correct? In the books of lessee, we know that now there is no concept of operating lease and finance lease. Can I say in case of lessee, we need to recognize ROU asset and lease liability. For that we require discounting rate, means either we require interest rate implicit on lease or incremental borrowing rate. That information is not given. That information is not given in the question. Correct. If you read the question, let me read the question. On 1st April 2023, Tata Limited leased a machine from Tata Limited on a 3-year lease. The expected future economic life of the machine was 8 years. If the machine break down, then under the terms of lease, Tata Limited would be required to repair the machine or provide a replacement. Means it is a question for Tata Limited, and Tata Limited is lessee. Tata Limited is a lessee. Tata Limited is a lessor. Can you say in the books of lessor? Of course, it can be finance lease, it can be an operating lease. Correct. Now, Tata Limited agreed to allow Tata Limited to use the machine for the first 6 months of the lease without the payment of any rental as incentive to Tata Limited to sign the lease agreement. So, first 6 months it will be free, means no rent will be charged. After this initial paid lease rental will be 4,20,000, where payable 6 monthly in a area. Means after every 6 months, in the lease payment will be for 6 months will be 4,20,000. The first payment falling due on 31st March 2024. This is the end of first year. End of first year means, can I say there will be 5 payment of 4,20,000? Are you able to understand? So can I say whenever in the books of lessee it is a short-term lease or lease of low value asset, then there is some recognition exemption has been given. Otherwise, we need to recognize ROS and lease liability, and from the question it is understood the question is the lease is not a short-term lease, nor it is a lease of low value asset, and therefore we need to recognize the lease liability. For that we require discounting rate. That is not given in the question. Are you able to understand? So for this particular type of question, you need to assume that this particular question is a lease of low value asset. That assumption you take, and based on that you need to give the answer. If you have analyzed that, then of course you might have given correct answer. So can I say if it is a lease of low value asset, the entire lease payment will be recognized as an expense over the lease term, either on SLM basis or any other appropriate method, because no other appropriate method which has been given will apply SLM method. We apply SLM method. So what we'll do, 4,20,000 is the lease payment for 6 months and 5 payment will be done. So total lease payment will be 4,20,000 into 5, that is 21 lakh. It will be divided by total lease term, and total lease term is 3 years. So 21 lakh divided by 3, it becomes 7 lakh. It becomes 7 lakh. Correct. It means, can I say 7 lakh is the annual lease expense. Annual lease expense. So first year expense will be 7 lakh. Second year expense will be 7 lakh. And third year expense will be 7 lakh. You can see year 1, year 2, year 3, 7 lakh, 7 lakh, 7 lakh is the expense. But can I say for first year only the payment of 4,20,000 has been done. So if the payment of 4,20,000 has been done, so what is the amount payable? Amount payable will be 2,80,000. So can I say at the end of first year, on the assumption whatever we have taken one assumption, this is a lease of low value asset. So can I say based on that assumption, 2,80,000 is the liability which is payable. Now out of 2,80,000 we need to find out how much current portion, how much non-current portion, how much current portion, how much non-current portion. So you can see in the second year 7 lakh is the expense and the payment is 8,40,000. So out of these 2,80,000, in the second year 1,40,000 will be adjusted, and in the third year again 1,40,000 will be adjusted. Means out of 2,80,000, 1,40,000 become current and 1,40,000 become non-current. So in the first year your liability was 2,80,000 At the end of first year, total liability was 2,80,000. Out of current portion is 1,40,000 and non-current portion is 1,40,000. So what is the question? Let us read the question. Calculate the current liability for the machine from Dara Limited to be shown in the balance sheet as on 31st March 2024. So answer become 1,40,000. Answer become 1,40,000. I hope it in this particular scenario, if you are not conceptually strong, you might have done wrong. You might have done wrong. How many have done mistake in this particular part? You need to comment in the comment box. Got this point? I will say this question has not been designed correctly. There is some information was missing, so we need to take assumption. देखो, whenever question is not properly designed, तो assumption need to be taken. You will take the rational assumption. You can't say that you will not take assumption and will carry forward the question. You can't do that. चलेगा? Yes, sir. Next point is what? What is the amount of revenue to recognize by Tata Limited for elevator contract during the financial year 2023-24? This is a direct question from institute resource only. Very simple question. This question have been asked in past attempt many times. On 1st Jan 2024, Tata Limited took a contract for installation of new elevator at a factory of its customer. The entity estimate of following with respect to the contract. You can see transaction price 30 lakh. Transaction price given, an expected cost of elevator is 10 lakh, another cost 12 lakh. It purchased the elevator and delivered the same to the site 6 months before it required the installation. Whenever you can see there are actually the installation of elevator and then installation of elevator plus what is there? There is some other cost, means for renovation of what? Building. So Tata Limited took a contract for the installation of new elevator at a factory to which the entity estimate the following. It purchased the elevator. The full information I think has not been given, but can I say it is a installation of elevator and the renovation whatever they are going on, it is a part of single performance obligation. Yes, sir. So whenever it is a part of single performance obligation and the cost is not proportionately equal to the expected cost of satisfying the obligation, in that case the cost of this elevator will be recognized as revenue. Correct? Means revenue for this elevator will be the cost incurred, and we need to find out for this other cost how much performance has been satisfied, means what is the progress in satisfying the performance obligation. So you can see out of 12 lakh 3 lakh has been incurred. It means 25% of work has been completed for other cost. Correct? So out for this elevator we recognize entire cost, whatever cost has been incurred, that will be recognized revenue. Means out of 30 lakh 10 lakh will be the revenue to be recognized for elevator. Balance 20 lakh, for 20 lakh we recognize only 25%. 20 lakh into 25% is 5 lakh, means 10 lakh plus 5 lakh 15 lakh revenue will be recognized. 15 lakh revenue will be recognized. Understood? Correct. So can I say in this case what we are doing for elevator, our revenue will be to the extent of cost incurred. For other portion 25% of the balance transaction price will be the revenue which will be recognized, that is 10 lakh plus 5 lakh, that is 15 lakh. So answer will be 15 lakh. Let's see. Yes, option number C will be the answer. Chalega? Yes, sir. What is the amount of revenue to recognize for elevator? For elevator contract during the financial year. So for elevator contract, it is elevator contract only. So it means the entire contract they are asking. So it is 15 lakh. Are you getting? Means you need to read the question carefully. Chalega? Yes, sir. Okay, sir. Now coming to the next point. Question number 6. When should the government grant be recognized by an entity according to Ind AS 20? This is a direct question they have asked. Option number C is correct. I think in this everyone have done correct. When there is a reasonable assurance that entity will comply with the conditions and has received the grant. Option number C is correct. Question number 7. What is the stance of chartered accountant regarding conflict of interest? This is also direct question. Conflict of interest should not compromise professional or business judgment. Of course, our professional business judgment should not be dependent upon conflict of interest. Option number A is correct. Conflict of interest are acceptable. Not correct. Conflict of interest are unavoidable and should be accepted. Not correct. Conflict of interest should be disclosed but can still compromise judgment. Not correct. Option number A is correct. This is direct. I think everyone have done correct. Question number 8. This is a good question, I will say. This is actually based on one para given under Ind AS 101. So from my point of view, if you have the conceptual understanding, then only you can answer this. Otherwise, you might have done some mistake in this. Following statement are given to you in the context of Ind AS 101. In this case, if you know the concept of, from my point of view, option number 1 is 100% wrong. Option number 1, what is option number 1? Entity, because if you know about estimation, so estimation is based on the uh, estimation is actually based on the previous gap, unless there is an evidence of error. Unless there is an evidence of error, this is the point which we have discussed in our class. Entities shall not make estimate in accordance with Ind AS at the date of transition to Ind AS that were not required at the date under previous gap. So this option number 1 is not correct. Understood? This option number 1 is not correct. They have asked which of the above statement is true. So entities shall not make estimate in accordance with Ind AS at the date of transition to Ind AS that were not required at the date under previous gap. Correct. So if that were not required under previous gap, entities shall make estimate in accordance with Ind AS only. This option number 1 is not correct. I think you have understood. So option number 2, option number 3, option number 4 will be correct. If you read, then you will be able to understand. In particular, estimation at the date of transition to Ind AS of market prices, interest rate of foreign exchange rate shall reflect the market condition at that date. Based on common sense means whenever you are doing estimation of market prices, interest rate of foreign exchange, that should reflect the market condition on that particular date. Entity may need to make estimate in accordance with Ind AS at the date of transition to Ind AS that we are not required a date under previous gap. To achieve consistency with Ind AS 10, estimation in accordance with Ind AS shall reflect the condition that existed at the date of transition to Ind AS. So this actually is based on one para of Ind AS 101. In that para, 2, 3, 4 point has been mentioned. So option number C, only 2, 3 and 4 are true. Got this point? In this, I hope question number 8 might be difficult for you. Most of you might have given wrong answer. Coming to case study number 2. Planet Limited is a multinational company engaged in the business of manufacturing of various. Let me first come to the question, multiple choice question only. After negotiation of nationalized bank, how the long-term loan has to be classified in financial for the year ended 31st March 2024. Once again, similar type of concept we have done, similar type of questions we have done, similar type of question has been given in case study based multiple choice question also. Means it is not new question. Let me read the question first. The company raised a term loan of 1 crore from a nationalized India bank to purchase certain plant and machinery for agriculture segment during the year 31st March 2023. The loan is repayable over a period of 5 years. The terms and conditions loan agreement is that company should maintain a current ratio and debt equity ratio. If this covenant fail below this level, then the bank has a right to recall the entire loan. Means if there is a breach of contract, it will be repayable on demand, and once it is become repayable on demand, it become a current liability. The unpaid loan as on 31st March 2024 was 85 lakh. The current ratio is now 0.9:1 and debt equity ratio is now 0.65:2. The bank has sent a notice on 7th April demanding repayment of loan on account of breach of terms of loan arrangement. So notice, the bank has sent a notice before approval of financial statement, and can I say the default happened on 31st March. Default happened on 31st March. Once the default happened, can I say it become a loan repayable on demand and it will be classified as current liability. The financial of the company were approved and signed on 50 May. 50 May means can I say the bank has sent a notice before approval of financial statement. After receiving the notice, the CFO of the company contacted the bank and ensured to rectify the breach. Consequently, on 28th May, means after approval of financial statement, on 28th May means after approval of financial statement, the bank agreed not to recall the loan and allowed the company to achieve the contracted current and debt equity ratio by the year ended 31st March 2025. Means can I say this bank agreed not to demand loan, that is after approval of financial statement. It means can I say on 31st March, it will be a current financial liability. It will not be a non-current financial liability. If this agreement was entered before approval of financial statement, then it can be what? Non-current financial liability. It will be what? Considered as what? current financial liability. Current financial liability will be the correct answer. I hope most of you have given correct answer. Question 10. This is a good question. What will be the impairment loss of from investment in associate for the year ended 31st March 2024? Once again, good, but if you are conceptually strong, you might have done correct. Let me read the question. Planet Limited has recently acquired shares in Bean Limited and Camel Limited and prepared a draft consolidated financial statement in accordance with Ind AS for the year ended on 31st March 2024. It is a group policy to value NCI at fair value. The fair value of NCI in Bean Limited on the date of acquisition was measured at 1430 lakhs. It means the information has been given for two company. One company is Bean Limited, which is a subsidiary company. One company is a Camel Limited, which is actually an associate. Whatever part of the question we are doing, that is related to associate. The following information relevant regarding the acquisition of shares in Bean Limited and Camel Limited. You can see date of acquisition 1/4/2023, 1/4/2023, holding acquired 85/40. So 85 means control, 40 means significant influence. Retained earning on the date of acquisition they have given, purchase consideration has been given. In the draft consolidated financial statement prepared on 31st March 2024, they have given the share capital of Bean Limited and Camel Limited. Retained earning on the date of consolidation also given. Bean Limited and Camel Limited have not issued any shares since the acquisition of shareholding by parent limited. The fair value of net asset of Bean Limited and Camel Limited were the same as the carrying amount at the date of acquisition. Means the carrying amount and fair value on the date of acquisition was same. Planet Limited has a significant influence over Camel Limited is given. Understood point. An impairment loss of 204 lakh have been identified in respect of goodwill arising on acquisition of Bean Limited for the year ended 31st March 2024. The recoverable amount of net asset of Camel Limited has been deemed to be 11,760 as on 31st March 2024. So this point has been given to find out impairment loss for the investment in associate. On 1st Jan, this is an important point. I hope if you have missed this particular point, you will not get the correct answer. So on 1st Jan 2024, the Planet Limited sold inventory costing rupees 45 lakh to Camel Limited for rupees 63 lakh. The inventory was still unsold by Camel Limited as on 31st March 2024. So can you see it is a downstream transaction, goods sold by investor to associate, downstream transaction. This inventory was sold by Camel Limited to third party on 8 April. 8 April means after balance sheet date. So can you see there will be some unrealized profit, unrealized profit need to be eliminated. This is the question. So can you see in this question, first we need to find out goodwill or gain on the date of acquisition as per Ind AS 28. As per Ind AS 28. However, that part is not relevant. That part is not relevant because goodwill will come. There may be some gain also. So if there is a goodwill, the goodwill will not be recognized. Gain will be transferred to capital reserve. This is as per Ind AS 28. So what is the cost price of investment? You can see cost price of investment is 5760. Now we need to find out the fair value of INA of associate on the date of acquisition. So what is the share capital? Share capital on the date of acquisition is 4,000. And what is the retained earning on the date of acquisition? 6240. So you can see 4,000. Just calculate 4,000 plus 6240 into 40%. How much? It is 4096. So 4096 become the proportionate fair value of INA on the date of acquisition. So this become 1664 goodwill on the date of acquisition. This goodwill will not be recognized. So no Jana entry for this. No Jana entry for this. Now we'll find out the value of investment as on the date of consolidation, means as on 31st March 2024. So what is the cost price of investment? Cost price of investment is 5760 including goodwill. Now can you see we'll add post acquisition profit, proportionate share in post acquisition profit. So what is the retained earning on the date of acquisition? It is 6240. Retained earning on the date of consolidation becomes 7400. So what is the post acquisition profit? You can see 7400 minus 6240 is equal to how much? 1160. So 1160 into 40% you will do. Into 40% how much? It is coming 464. So that post acquisition profit will be added to the cost price of investment. One journal entry will do investment account debit to share in profit. Share in profit will be transferred to profit and loss account. So investment will increase by 464. Correct. Now there is one more point. There is some unrealized profit. The total unrealized profit. The cost price was 45 lakh and the sale price was 63 lakh. So 63 minus 45. It will become 18. 18 is the total unrealized profit. We need to find out proportionate unrealized profit into 40% will do. Into 40% is equal to 7.2. So 7.2. Whenever there is a downstream transaction, then what is the journal entry for what is journal entry as per Ind AS 28 for elimination of that annualized profit? I have said that will be deducted from the cost price of investment when we have done Ind AS 28. If you remember, I hope you remember. Means what will be journal entry? Journal entry will be retained earning account debit to investment. Retained earning account debit to investment. So investment reduced by 7.2. So what is the carrying amount of investment as per Ind AS 28? It becomes 5760 plus 464 minus 7.2 is equal to 6216.8. 6216.8. Now can you say we'll compare with the recoverable amount, but proportionate recoverable amount, they have given how much recoverable amount? They have given recoverable amount 11,760. So 11,760 into 40% will do, that will become 4704. So you can see the proportionate recoverable amount is 4704. So what answer we are getting? 1512.8, because recoverable amount is less than the carrying amount of investment. So there is an impairment loss. Impairment loss is 1512.8. 1.1512.8. I will say this was one good question, interesting question, which is totally a new question. So I am happy with this question. But if you combine Ind AS 28 with Ind AS 36, you could have done this. You can easily do it. Once again, I will say this is totally conceptual question. So answer is 1512.80. 1512.80. Understood? Great. Yes, sir. Chalega. Now, in this particular question, there is one more point they have asked about the goodwill. What will the goodwill for the subsidiary company? This is very simple. So, let us find out goodwill. What is the purchase consideration? Purchase consideration is 10,200. I have written 10,200. They have given fair value of NCI 1430. So 1430 we have added. Now we'll find out fair value of INA. So fair value of INA will be the share capital, retained earning on the date of acquisition. So share capital is how much? It is 3,600. Retained earning is how much? 5,400. Total become 9,000. So 9,000 become the fair value of INA on the date of acquisition, because they have already said carrying amount and fair value are same. The total become 26 as means 10,200 plus fair value of NCI 1430 minus fair value minus 9,000. So goodwill become, this is become full goodwill. Full goodwill is 2630. Now they have given that impairment loss, already they have given the amount of impairment loss on goodwill is how much? 204. So we reduce the goodwill amount by 204. So if you reduce the amount of goodwill by 204, the answer will become 2426. So goodwill to be appearing in consolidated financial statement will be 2426. 2426 will be the correct answer. So 2426 will be the correct answer. What will be the amount of goodwill as on 31st March 2024? They have asked. If they ask on the date of acquisition, the date of acquisition your goodwill was how much? It was 2630. But they have asked on 31st March 2024. So be careful what they have demanded. If you have done 2630, your answer will be wrong. Chalega. Now question number 12. What should be the accounting treatment for the cost incurred for renovation? This is also direct question from ICR resource. ICR resource means it is same question has been given in the Board of Studies portal. Now if you read the question, what is the question? What they have given? Planet Limited has constructed a shopping mall earlier. The company renovated a portion of mall by considering a food court, spa and the gaming zone. The food court and the gaming zone are expected to result in a significant increase in sales for the shop and outlet of the mall. Just try to understand what our Ind AS 16 says. Our Ind AS 16 says that if there is any subsequent expenditure, subsequent cost means any cost which has been incurred after initial recognition, that can be capitalized if the recognition criteria has been satisfied. If the recognition criteria has been satisfied. What is the recognition criteria? Recognition criteria is what? Recognition criteria means that cost incurred, whatever cost has been incurred, that should provide probable future economic benefit, and the cost can be measured reliably. Just try to understand, if you consider this part, the food court and the gaming zone are expected to increase, expected to result in a significant increase in sales. Significant increase in sales. Just try to understand, it does not mean the spa will not increase the sales. Spa may also increase the sale, but that is not significant increase. Are you getting? Means, can I say for spa also there can be probable future economic benefit? For spa also there can be probable future economic benefit. Just try to understand what is the language of the question. The food court and the gaming zone are expected to result in a significant increase in sales for the shop and the outlet or more, it does not mean that spa will not give future economic benefit. Of course, that will also give or increase the future economic benefit, but it might not be significant increase. So from my point of view, all the costs should be capitalized. Means if I consider the uh, if I consider the aspect of India 16, so what they have said, expense incurred for food court and gaming should be capitalized. This can be one probable answer because of that point. If you consider that particular information, whatever has been given in the case study, if you consider that, A will be correct. But if you consider India 16 recognition criteria, your answer will be expense incurred for the food court, spa and gaming zones should be capitalized. Means I will give you, means from my point of view, answer can be A, answer can be B, depending upon, means we need to wait for the final answer given by the institute. Final answer given by the institute. Here थोड़ा सा doubt will come. थोड़ा सा डाउट विल कम कि whether A is correct or B is correct. A is correct or B is correct. Understood? चलेगा? Will not fight on this. Will not fight on this part. As per my point of view, as per India 16, SPA will also provide some additional future economic benefit. हाँ, it might not increase the sales significantly, but it is also increasing the sales. Nah, got this point? Yes, sir. Now come to case study number 3. This is also simple. This is direct question from ICA Board of Studies. The same question has been given in my chapter wise case study also. I will say most of the question are directly from the case study. Chapter wise case study I will say. Chalega. Nikhil Private Limited acquired 100% Pranav Private Limited on Jan 1, 2023. The fair value of purchase consideration was 20 crore, consisting of ordinary shares of 100 each of Nikhil Private Limited. The fair value of net asset acquired was 15 crore. The fair value of net asset is what? 15 crore. And what is the purchase consideration? 20 crore. What is the date of acquisition? Jan 1, 2023. At the time of acquisition, the value of ordinary shares of Nikhil Private Limited and the net asset of Pranav were only provisionally determined. Means it is a case of measurement period. If you remember measurement period, yes sir. On November 30, 2023, can I say it is before the completion of 12 months from the date of acquisition, means it is during measurement period. It was finally determined that fair value of Nikhil Private Limited shares was 22 crore and the fair value of net asset of Pranav Private Limited is 16 crore. It means PC and the net asset will be this only for the calculation of goodwill. However, the directors of Nikhil Private Limited have seen that fair value of company share declined since Jan 1, 2023 and wanted to adopt the fair value of shares as on 1st Feb 2024, which will result the fair value of consideration at being valued at 18 crore. Okay, this information is related to the facts and circumstances which arises after the date of acquisition. Therefore, this para is not at all relevant. Not at all relevant. In addition to above PC, the acquisition agreement states that an additional rupees 4 crore will be paid if Pranav Limited achieve a turnover of 160 crore in the next 2 years. So can it become a contingent consideration? So as per Ind AS 103, the fair value of contingent consideration on the date of acquisition will be included in PC. On the date of acquisition, the fair value of said consideration is 3 crore. In Feb 2024, due to decline in the performance of Pranav Limited, it is determined that it is unlikely that it would meet the budgeted turnover of 160 crore. Means now they are saying they will not be able to meet the condition. But can I say it will be included in PC based on the fair value on the date of acquisition, and fair value on the date of acquisition was 3 crore. So 3 crore will be included in PC. Chalega. Now what they have given. Net asset value will be based on the measurement period. The measurement period, what information? 16 crore. So 16 crore will be answer. Value of PC will be based on the measurement period. The answer is what? You can see 22 crore. So answer will be 22 crore. Correct? So 22 crore will be the answer. Question 15. How should Nikhil Private Limited treat the contingent consideration linked to achieving share? In this point number C is correct. I hope in this everyone have done correct. Who have थोड़ा सा knowledge about Ind AS 102, they will do point number C only. Nikhil Private Limited should recognize the fair value of consideration as a part of business combination, thus increasing goodwill, and remeasure it at the end of each reporting period because it will be payable in cash. If it is payable in cash, it will be classified as financial liability. If it is financial liability, it will do measurement at the end of each year, and any fair value gain or loss will be transferred to peer. The impact of change in the fair value is recognized in statement of profit or loss. With this, we have done entire discussion about multiple choice question. I hope this will help you to understand how you are performing the exam. Based on that you can decide upon how much marks you can get. Can I say multiple choice question you can exactly determine how much marks you are able to achieve out of 30 marks. Descriptive question, it depends upon, thoda sa it is subjective, depends upon how you have written the answer, depends upon presentation. But multiple choice question, what is the option, whatever you opted, based on that you will get the marks, correct? So this will help you to understand out of 30 how many marks you'll get, correct? Now, and you can analyze what is the performance, how you have performed in your exam for the multiple choice question. I hope this will help you. If this particular video has helped you, do like this video and share this video with all your friends. Bye bye, all the best. Soon we'll meet with, soon I will also provide you the review and the suggested solution of descriptive question. Don't worry about that. That will be probably given after the group 2 examination. All the best. Bye bye, love you all.